Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, straight away then, let's invite the first corporate joining us in the next 1 hour, and that's Saksoft. It's on our radar. The company's posted a fairly strong Q1. The revenue, EBITDA margins have come in strong this time around. Niraj Ganeriwal, the CFO of the company, joins us on the phone line. Niraj, good afternoon, and thanks so much for joining in. I was reading the company's annual report, and over there, the chairman had indicated that the company is at an inflection point. It is at a cusp of delivering very strong returns to all the stakeholders. In Q1, the company has reported a fairly strong revenue growth. Give us a sense of the kind of revenue as well as EPS growth we should expect for the company in FY19.
Good afternoon, Ria, and thanks for this. Yes, we have seen a robust growth in Q1. And, last year we had closed on year-on-year growth in terms of 10% on revenues and more than 20% on the EPS and on the profitability. Q1 has seen a 26% growth in terms of revenue, and we do expect that this sustained growth should continue, is what we believe.
A 25% revenue growth for the full year is your guidance?
No, we don't give guidance, but you've seen that in Q1, and we believe that we should be able to sustain this growth.
Okay, all right. So if you sustain this kind of a number, then we are, expected to see a revenue of around 340 crores odd for this year. Let's talk a bit about your margins. You have been hovering in that range of around 14 to around 14.5%. Now you have a currency tailwind, isn't it? Does that help margins? Do we see it increase from here?
Oh, definitely, Nigel. There has been a positive impact in terms of the currencies. And in fact, Q1 margin should have been better on a like-to-like basis because Q1 is the period when we have the annual appraisals and increments. So in spite of that, we have been able to maintain this margins and slightly improve. So Q2, with the improved currency and with the effect of increments moving out, we should definitely see a better margin.
Okay, and any indication of the kind of margins you could improve, because you are increasingly offshoring all the work that you're getting in. So what would be the target margin range that the company could realistically operate at?
Today, we are almost at a 50-50% between on-site revenues and offshore revenues. And it's a known fact that the margins on offshore is better. We are looking at improving the offshore revenues from about 50% to maybe a 55 to 60% of our share. And this could definitely help us in improving the margins by 100 basis points to 150 basis points.
Niraj, over the last few years, y'all have been doing a lot of inorganic growth, right? You'll have been going out there and acquiring a lot of companies. Is there more plans on that front? Are you looking at inorganic growth? And also, if you could give us a sense, what's your balance sheet looking like? What's the cash? What's the debt in the books?
Sure. So, Nigel, we had spoken in the past, and we do have a string of pearl strategy where we cherry-pick in terms of what acquisitions we can do, and we are constantly looking at some good assets which can look at, but, it does take time. So, answering your question, yes, we would be interested in acquiring more companies depending on if they fit the strategy we have. And in terms of balance sheet, our cash is almost 30 crores on the books and a debt of 45 crores. So the net debt is very low, and we're adequately leveraged to go in for further acquisitions if required.
Any acquisition likely in FY19?
Immediately, I'm unable to comment on the same, but as I mentioned that we are looking, and if something comes by, we have a strong team who can close it quickly.
Okay, we'll leave it at that. Thank you very much for joining in. So that is Saksoft. Believe the Q1 performance is sustainable. We'll look at improving margins going ahead on the back of a higher contribution from offshore revenues, where the margins are typically higher. Get into a break then. On the other side, this is turning out to be quite an IT special. We'll be joined by the management of Sonata Software. Stay tuned.
Welcome back. Then keep an eye out on the management that just joined us at Saksoft. They said that, in fact, the first quarter was good, and they believe that the performance is sustainable. The stock has moved higher now. In fact, it's moved through the roof. It's up nearly around 18% odd. So keep an eye out on that one. And in the last month or so, I think the stock has moved from around 240 all the way to around 300. So please keep that in mind as well. The stock is up nearly around 38%, in fact, from lower 200s all the way to around 300
Today
rupees.
itself is added, what, 50 rupees?
50 rupees, absolutely. So just keep that in mind, just alerting all our retail audience as well out there. But moving on then, in a CNBC exclusive, former RBI Governor Raghuram Rajan talks about the impact of the ongoing currency crisis on emerging market economies. He believes that the state of emerging markets is way better than what it was in 2013, and that the rupee hitting an all-time low is not much of a concern. Let's hear him out.
It's early days, and I think the real problem is Turkey is an outlier, both in terms of the leverage that has built up over the years and the quality of policy, which has been pretty bad. So it may be an early warning. It may be something which doesn't spread more widely because Turkey is special. There are, of course, other countries which are in some situations of fragility because they have upcoming elections, they have a large current account deficit, they have a large fiscal deficit. But in general, emerging markets look a lot better than they looked in, say, 2013 when we had the taper tantrum. I think the rupee has been strengthening in real terms for quite some time. The inflation rate has been modest but slightly above world inflation rates. And as a result, the rupee needs a modest weakening over time. So I'm not too concerned about the rupee hitting an all-time low. It's more a factor of dollar strength rather than necessarily rupee weakness. But I would say that broadly, you want to look at countries with large current account deficits as well as a high level of debt. For Turkey, it seems to me that the right path is the path of orthodoxy. At this point, basically say, we didn't mean what we said about keeping interest rates low, and that's the way to curb inflation. We're really going to take control of inflation. That means raising interest rates, having a serious inflation target, bringing more central bank independence. I think that would do a lot to stabilize the lira. But it's important that it not be a one-off. It's not about raising interest rates once. It's about saying, look, inflation at 15% is not something we want. We want to bring it down to manageable levels. That will stabilize the exchange rate. For that, here are a set of policies which ensure that we will do it. Clearly, the amount of leverage that has built up is a big factor. Turkey has an enormous increase in private sector debt, a lot of it foreign exchange denominated, which is contributing to the problem. But I would say on top of that, for emerging markets, other than the level of debt, you want to look at the current account deficit. Oil prices have picked up in recent months. Of course, they're relatively stable right now. But some countries are very heavily exposed to oil. Also, I think you want to look at political fragility, upcoming elections. There are some countries which have a very serious possibility of a regime change, and that's worth watching.
By the way, while today has been a good day for the IT companies in the back of rupee depreciation, HCL Technology is not participating. In fact, it's dipped into the red as we speak. And even if you look at the performance on a year-to-date basis, HCL Tech has seen a rally of, 12% in 2018 compared to 40% by TCS and 36% by Infosys. So it's been a clear lag in this year. And as we speak, the stock has dipped into the red. But let's invite a mid-cap IT company, that's Sonata Software. The company has reported a good set of earnings. In fact, this stock has been on quite a roll, 20% up in 2018, 100% plus up in the last 1 year. The numbers are looking good. Their revenue growth was driven by the domestic products business, while the margin beat came in from the international business. Prasanna Oak, the CFO of the company, joins in now. Good afternoon, and thanks so much for joining in, Prasanna. Let me first start with your international IT services business. Your revenue growth was about a little more than 1%, so slightly shy of your own guidance of 2 to 3% on a quarter-on-quarter basis. But if I look at it on a year-on-year basis, it's about a 15.5% growth. Give us a sense of how the trajectory is looking for the full year.
Yeah, thank you, Rima. Actually, just to clarify our dollar growth, while it shows as 1%, we were impacted by cross-currency on account of the GBP. Our growth in terms of a constant currency has been about 3% for this quarter, and in line with our expectations. So we think it is good performance, and I think the year-on-year growth has been about 22% for this year. So on an international business, as we go ahead with our focus on platformation and digital transformation for our clients through this medium, and Platformation is one of our proprietary technologies that we are using. We are seeing this message getting across to our clients. We are engaging in a number of discussions, interesting, which will lead to sustained and continued growth. And so we believe that with the strategy that we have put into place, I think our growth on a constant currency basis of 3% for this quarter will sustain, Rima.
Okay, all right. And for the year, what kind of a number we can work at for international business and domestic business? If you can split that up for us.
Yeah, so Nigel, very quickly, our international business last year we had grown by about 18% in dollar terms for the full year. So, while we don't give a guidance as such, but we believe that we've got the right momentum, we've got the right conversations going on with our clients. And we will see in the next 2-3 quarters, we don't expect any adverse surprises. So, to that extent, I would say that we would like to keep up this momentum and trajectory. On the domestic part of the business, it's grown by about roughly, we measure this domestic business in terms of margins. It has grown by about 7% on the PAT in this quarter on a sequential quarter basis. So we are getting our message of Platformation into the domestic services also. We are engaging with clients on the entire strategy, adding value-added services. So we expect that while we may not look at revenues in terms of growth, but our margins and absolute margins more specifically will continue to show uptrend. Again, on this segment also, while conversations are going on, but we believe that clients are finding far more value, and that's the reason you're seeing the kind of a sequential PAT growth on the domestic business also.
Okay, so since you're saying the correct way to measure the domestic products business is by the absolute EBITDA. In Q1, it was about 16.7 crore. What should be the expected growth from here on? Give us some idea of the run rate or improvement that we should expect.
Yeah, thanks, Rima. In fact, I think we expect the industry to be growing at about 10%. On the domestic side, we believe that we will be bettering that. Our growth on a sequential quarter basis in terms of EBITDA has been 6%. Our intent of the organization will be continue to kind of maintain that kind of run rate growth. That's the plan. That's where we are focusing on. And obviously, if we get more traction with our value-added services, we would hope that it carries on in the same momentum. So a lot of efforts being put on to engage with more clients, more value-added services. It's not just the license margins which are lower, but in terms of taking them to the cloud, to the Azure cloud, to doing the license management, to working with them on the security aspects of it, to give them an over-encompassing view and validated services to actually transform the domestic clients also. So all those initiatives are working for us, and we believe that, as I said, the growth should sustain and continue.
Prasanna, as you speak, it seems the street likes what you're saying. The stock has moved to the high point of the day. So let's get into some more details coming in from you. If I look at your market capitalization, it's roughly around 3,500 crores or thereabouts. What is the cash that you have in the books currently, and how do you intend to use it? Is it a possibility you buy back some shares, give a dividend, or do you want to do some inorganic growth?
Right, a good question. So very quickly, our cash at this point of time, net of any debt, etc., is about 489 crores, roughly about 15-16% of our market cap. But I think more importantly, we have been returning cash back to our shareholders. We had the AGM a couple of days back. They approved a 6.5 rupees return back. Overall, our yield seems to be about 3% back on the dividends. We gave a combined dividend of 10.5 rupees this year. So when we don't need cash, we return it back. But as you rightly said, that we continue to have appetite for growth, which is not organic, which is inorganic growth. We continue to look at strategic targets. in the areas of platformation, in the areas of basically Microsoft Dynamics 365, anything that makes our solutions more robust, increases the value for our customers, and so, apart from dividends, which are obviously a decision by the board, but as a company, we continue to focus on inorganic growth also, and we continue to look at, avenues and opportunities for the same.
So of the 490 crore of cash, how much have you outlined for a potential acquisition? Are you already in discussions with potential targets? What stage have the discussions proceeded right now at? Could you close the acquisition in FY19?
So yeah, we don't have a clearly demarcated amount of what we will go in for the acquisition. So our focus is to find synergies that we can leverage, and so therefore, to answer it simply, again, there's no earmarked cash for it. But if we like a target, if we are thinking that this will have synergies, we will definitely go in for it. We continue, as the question you asked, we continue to look at it. We always have a pipeline. We have discussions going on. Obviously, it needs to work between both the parties. And so, yes, to confirm, yes, there are discussions which are ongoing all the time. And we will see. We've got about 3 quarters more to go. So, yeah, inorganic will definitely be an option for us.
Okay, all right. Prasanna, thanks so much for joining in. Well, it seems the street really likes what you have said, because the stock is up nearly around 6%. As it is, it was holding with a gain of around 3% odd. So IT seems to be really the flavor of the day, actually, because we had a smaller company, Saksoft, that joined us. That stock is up nearly around 15%. Sonata, the management commentary was quite positive. You see that stock as well is up nearly around 6%. And I think, Rima, since you're tracking IT companies, I think we'll try to get one more company later on in the show as well. For the time being, we'll slip into a short break. You come back, we'll be joined by Ashwini Gujral as well as Rajat Bose. They'll tell us how to trade the index. Stay with us.